All good. It works.
Good. So, hey, thank you. Thank you for coming. We'll try to do a very honest, conversation, right? About what's happening with fundraising, entrepreneurs that already fundraise or looking to fundraise. But first, let's start with a short introduction. Jahed, do you want to start?
Sure. So I'm GP of Cerulean Ventures. We invest at the intersection of Web3 and climate and sustainability, and that's pretty quick.
Hi, everyone. I'm Meiri Alegre. I am the founder and GP at Flori Ventures, and we run a fund. We're a Web3 impact fund, so we invest in emerging market, fintech, and climate. Before this, I was a founder, so I just want to say, anyway, we're a VC, but we've also, several of our partners have been founders and have lived the experience of also fundraising in hard times. So I'll talk from both experiences.
All right. I'm Amos, originally also a founder, raised, I think in total around $100 million from different VCs. Now running my own fund, Node Capital, which is a fund focused on a decentralized infrastructure. So I'm really happy we have the conversation between entrepreneurs and VCs, and it's always very hard to raise money. Putting aside 2021, which was a crazy year, which I think, there were entrepreneurs sending a deck and getting a term sheet right after. But, if it was already hard for even experienced entrepreneurs, there is always this chicken and egg problem that entrepreneurs are asking me. All of you, those VCs, you're looking for experienced entrepreneurs. Right? So how do I start if I never raise money? And how do I do that in such market? Maria, do you want to start from the angle of the entrepreneur as well?
Yeah, absolutely. So one clarification I would say is that, in maybe we're looking for other stuff, we invest in pre-seed and seed, and we don't always look for experienced entrepreneurs. We don't look for founders that have already started a company. We like that. We think that's a good experience. But when we look at the founder, we measure traction of their life in a way. We look at what they've done, what they've accomplished, how they have measured their own success, how they make decisions, how high they are trying to get in their lives. And that's how you see traction in a pre-seed founder of pre-seed company. I guess I'm also biased because I raise money as a, as a founder without experience. I had a job for a couple of years, but I hadn't had a company, I hadn't managed people, I hadn't raised money. And eventually we were able to raise because our business had traction, because we were able to meet some companies, some investors, and tell them what we were planning to do, and then meet a month later and do that, and then meet a month later and deliver on whatever we had said. So anyway, it was more proven traction than experience.
All right, Jahed, like we discussed before about entrepreneurs approaching us, right? They're sending us messages in Twitter and then on LinkedIn, right? First, do you feel a difference between 2021 to today? And then, how would you suggest, with all of that, to raise above all of the noise? What do you suggest those entrepreneurs?
So, the first question was, is there a difference between 2021 and now, right? Oh, absolutely, right? I get to exhale a little bit and read a deck, which is really great, right? I get to talk to you, and a lot of the things Maria said about your background, actually understand where you're coming from, why you want to do this. That's all really important to understand, right? If you're going to start a venture, we want to work with you for a long time, and we want to feel that you want to do this for a long time, right? And it's going to be hard. So we screen for that. We have various ways of doing that. And then, what was different in 2021 is that you had a bunch of funds who had just raised $1 billion who were like, well, let's deploy it in 9 months. which I don't really know why they decided to do that, but it wasn't a great decision. In 2023, a lot of us now have the ability to slow down, get to know you, get to know what you're doing, get to understand the market, which is great. It's great for you and it's good for us, right? That's like the major difference. And then the second part of your question, remind me.
I mean, what I'm asking is like, in the end, people are sending you messages and you just can't answer all of them, right?
Yeah.
Like how can I, as an entrepreneur, kind of like make noise, raise above all of the noise, right?
Yeah, absolutely. I think I'm going to answer this as if I was trying to get you to invest in my company, okay? So if you remember, what did Amos say when he introduced himself? He said, Node Capital invests in decentralized infrastructure, right? So number one, just read his website, right? Like, just get a feel for what gets Amos going. Why does he want to invest in things? If you're not doing decentralized infrastructure, don't waste your time in his, right? It's very simple, right? I think that's just number one for me. I get so many of these where I'm like, I love this idea. It's not something that a climate infrastructure fund can invest in, right? So like, save yourself the time. It takes 2 seconds, right? Like hitting me up on LinkedIn, hitting me up on Twitter, or whatever. Just understand the space that we're also obsessed with things and bringing them into life. But entrepreneurs are our conduit for that, right? And so like, what you're trying to do in the world is what gets our attention, and
you're telling them how to save time.
Yeah, exactly.
Tell them how to raise above the noise once they.
No, well, I mean, but honestly,
But that's raising above the noise, right?
Sure.
If someone is
Absolutely.
saying, I saw that you invested in that, like, this is very, very interesting, la, la, la. I'm doing that, right? He knows how to approach me, he knows how to put, like, in the first sentence, the things that will get me excited about to keep on reading, right?
Good.
yeah, absolutely. That's the thing, right? Is that like, just and you can, yeah, absolutely. And then also just it's maybe a little bit vain, but you put some time into understanding me and what I'm trying to bring into the world, right? Then that gets my attention.
So funny how you can say that now and you could not say that last year. Last year's like,
No,
what do you
could
need
not.
founders? How can we? So just the dynamics have changed a lot. Anyway, just noticing that.
So, what are kind of like the areas that you feel, everyone were excited about during the bull market and kind of like faded away? And what are the current trends that you feel, have more traction in terms of investments?
Well, I would say that maybe a year and a half ago, wanting to make crypto easy to use, we thought there would be many use cases that maybe they're not core to our thesis. Like we want crypto to be useful for real people. And therefore, we're investing, for example, a lot in payments and money transfers and money being international, like real uses for real human of crypto. And however, a year and a half ago, we thought, well, maybe gaming, because, like in mobile, gaming ended up making everyone comfortable spending money on mobile. And it was a clear way to lower the barrier for usage because it just gets millions of people like already with wallets and comfortable using tokens. And therefore, the next step would be, okay, now that I know how to do that for gaming, I'll just use it on the store, right? So that was our thought process at the time. And there were some of those use cases of like gaming and NFT and music that we thought, okay, it gets people excited, and then it will become useful in real life. And before this, I started a gaming company, or I worked at a gaming company, or started a technology for gaming companies product. So anyway, like familiar with how that industry works, but it was kind of an indirect approach to where we wanted to go. And that for us is not the case anymore. We're now going direct to our thesis. And I would say that's possibly something that is shared by other VCs, that some things were a means to an end. And
I think the easier thing is like, if in 2021 I'm doing this, but on this chain, but the same thing like used to work, but it doesn't work anymore. Like you really need to be different right now and doing something different in order to raise money. That's at least what I feel, because there was a lot of copycats. They were kind of like, I'm doing that, but on Starknet. I'm doing that, but on Cosmos, right? It's like,
absolutely.
And that's kind of like totally over, right?
And I would add that before you could have a very clear vision, an idea, and now you just need to show me how you're gonna do it. Like, not only tell me, but like show me how this different approach is working, and like start with the numbers. Yeah.
I would definitely add to that, right? Like these days, if you're trying to get my money, I am going to ask you, what is your go-to-market? And it can't just be like, well, we're going to put it out there and people are going to use it, right? And I'm like, cool. To echo Itai over here, probably, how are you going to get their attention, right, from the previous panel? How are you going to sustain it? What does your churn look like, right? These are all, you know, just even hearkening back to like the Web 2 stuff that I used to do. This is the type of thing that you need to do if you're thinking of how do I get developers and users for my protocol. That's all stuff that now is very, very important that I did not see happening like a year ago.
How do you deal with the entrepreneur kind of like raised very easily, right, money in 2021 and now starting to run out of money and kind of like not really understanding still like the real world, which is not that easy to raise money? Like, what are your suggestions to them? How do you kind of like help them adapt to this new environment?
Yeah, sure. I think number one is just, it's really difficult for them because it requires reflexivity and honesty with yourself at this point. You have to think, how did I get to this spot if you're not talking to me about it? The next thing is I can help you get there, and I have done this recently. And like really 5 times in the last 2 months, we've had these conversations where we had to say, look, I'm going to be totally honest with you. Their company is what YC calls default dead, right? If you run the numbers, this thing is dead in 8 months, 12 months. You raise too much money, you're looking at a couple options. If you're still going to stick with VC, you're going to raise a massive down round. The company will still be around, but everyone who is here is going to be mad at you. It's the way it is. Do you want to keep doing it, right? And it's just the facts, right? And hearkening back to our last panel, right, we did a similar one at ETH Barcelona. I remember exiting it, like ending it on a, what is your advice to this crowd? And I was like, we're now coming down the other side of the peak of valuations. And if someone is offering you a pre-seed term sheet at $25 million, don't take it. Like, so don't end up in the situation that Amos is talking about here, right? Because if you really crush it, you'll have a nice chance at a good seed Series A valuation. But we're talking about, that's 3%, 5% of startups, right? Like, you might think you're in that one, but hedge your risk, right? Take the $15, $10 million one, grow slower, and get there in more incremental steps.
All right, so that was the advice back then, right? What would be the advice right now for someone who's, you know, getting like his first steps into crypto, looking into different ecosystems? Where should he build? You know, how should he build his fundraising? What are the type of backers that he needs for his project?
Before you could race around with 10, 20 different investors with small checks. It's much, much harder to do that now. You're gonna find yourself having less investors with bigger checks that have more time to get to know you, that once they get to know you, are able to make a bigger bet. In general, you're gonna raise less money. So one thing that is different also now is that now you need a complete team. Before you could raise with, okay, we're still missing the CTO, but like this is the solution we have for now until we find the right person. I don't think that's feasible. I mean, nothing is impossible, but like that's much, much harder right now. Just having a complete team, maybe someone go to market, someone technical, and then in general, just have a strategy for not dying if you don't raise, right? Like always have a very clear plan B. And yeah, I mean, it's just endurance and resilience.
Yeah, I think like to me, looking as an entrepreneur who kind of like lived beer bull market is all about being loyal for what you want to build and build it not just for the next buck, but actually because you think what you're building is meaningful and people will care about. And you know, there are a lot of good entrepreneurs that I know in crypto that keep their even, you know, regular job, building stuff on the side, and when they're ready, have more they're comfortable with what they've built, they're leaving their job, going to raise money, etc. So it could be a process right now. Then all of those stories of your friends, maybe you kind of like drop school, drop their job, raise money at I don't know, $40 million valuation in 2021. That just doesn't exist anymore. Yeah. Okay. Maybe we give some time for questions. If anyone want to ask anyone here on stage.
How do you convince a VC from being just an investor to a lead investor?
I can tell you this from one who rarely leads, so probably the kind of person you're trying to convince. Most of the time, it's not really up to us. Like, our funds are not structured to lead, right? So we come out of it with, like, almost specifically, like in the documents that incorporate what we do, we're literally saying we don't lead because we don't have the capacity to, the funding, the due diligence, all that. It's a different type, and I'm gonna probably kick it over to Amos too, actually, because he does lead sometimes, and he can shine a little light.
So I think, like, first know if this investor can lead you around or cannot lead you around, and focus mostly on leads in the beginning, right? Because that's the important part. Once you have the lead, everything else will kind of like fold, especially if this lead have like a good name and people trust his due diligence and what he thinks about. So I'll definitely say, like, try and focus on the lead. Let's
just ask too, just straight up in your first meeting, do you lead?
Yeah.
And I would say, do you lead and at what size? Because we lead, but we lead small rounds. We don't lead if you're raising $3 million, which would be medium now. It's small in other times.
No?
I'll just ask.
We'll repeat it.
What do you think the difference for entrepreneurs from looking at the beginning for angels before going to VC? How about solidifying first with people inside the industry as angels, and then what are the differences?
Sure, Maria. So between angels, what should I choose? Like angels or VCs in the beginning?
I think angels are a great way to recruit mentors, because you cannot pay mentors. Cannot pay the good mentors because they are you just can't pay them. You can't afford it. And having mentors give you 5, 10, 25K is a way to align incentives. And if you open an angel round at $1, $2, $3 million valuation, that gives them a stake before then you're raising at a higher, so they can make intros, they can give you advice, and there's a time for angels. Later, it just has a lot of value.
All right. Do we have another time for questions?
We can do one last one.
All right. So go ahead. Yeah.
So specifically speaking to impact and refi, I think a lot of people that are working in that space are realistic and know that it's not the most lucrative area to work in, and maybe don't have that like money-driven mentality, but are very adamant about making change and creating solutions. So what's your tip for someone in that area to click it over and make it like a sustainable venture?
Well, it's different for a business to be a sustainable business than to be a VC backable business. We choose to invest in this area from the VC perspective. We're still looking for VC returns. And we do find a lot of conversations with companies that we are happy they exist. We want to root for you. It's just not something we can give you VC money for because you won't be able to follow that path. Doesn't mean we end up trying to support or connect in different ways. And you just need to know what kind of company you're trying to build.
Yeah, just to echo that, I think the venture outcomes, like we're by fiduciary duty, we're constrained by, I hate that word, but in more ways than one. But yeah, that's basically just the brass tacks of it, right? And so I think how do you maximize our attention on that type of stuff? Honestly, there are completely unaddressed markets and impact that are massive that only some people who are close to them as local actors even see. That's the real opportunity with this stuff, right? When you actually are like, look, here's, going back to the remittances stuff, there's still a lot of unexplored cracks there that are massive market opportunities. You get into one of those, then you get the refi and you get the actual venture returns. That's the sweet spot.
Thank you very much. Thank you, everyone. We'll be outside
Thank you.
if you want to ask more questions. Thank you.
Thank you.